Revolve Renewable Power is a developer and operator of renewable power projects in the US, Mexico, and Canada. Revolve just posted its Q2 fiscal 2025 results, showing a 375% increase in recurring revenues. CEO Myke Clark and CFO Tanya Ontiveros are here to discuss the results and the outlook. I'm Martin Gago with Market Radius Research. It's Friday, February the 28th. Please remember, this is neither recommendation nor investment advice. We're here to learn about the company. Thank you for joining us. It seems like a solid quarter you had there. Why don't you give us some highlights on the quarter and what things are looking like in the future?
Yeah, sounds good, Martin. Well, thanks a lot for having us. First of all, it was a very strong quarter for us, our Q2 fiscal 2025. We recorded another good, strong recurring revenue growth quarter. Recurring revenue up over 375% over the same period last year. So that was quite exciting. In addition to that revenue growth, of course, we saw some milestones on our utility scale portfolio, continued to expand that distributed generation pipeline as well. In addition to that, we continue to assess some additional acquisition opportunities as well. So from a financial perspective, things quite strong. From a business perspective, strong as well. So it was a really exciting quarter for us. In terms of some of those high-level numbers, 621,000. This is all US dollars in terms of that 3-month revenue. Again, a really nice increase over Q2 of 2024. As we start to see some of these newer projects that we've either acquired or built ourselves coming online and giving us that full year of revenue. And of course, that electricity generation number has gone up significantly over last year as well as those projects come online. And also as we optimize them and make sure that they're producing to the extent that we know that they can. So overall operating capacity right now, about 12 megawatts roughly. And that, of course, as people don't know, is across Canada and Mexico with broader development stage projects for the company in both all three of Canada, the US and Mexico. The latest project to come online and contribute to that recurring revenue stream is a project in Mexico, about a 0.5 megawatt project in Colima. So we commissioned that recently. So again, we're kind of hitting on all the milestones, and that's now starting to reflect itself in the financial statements. If you just wanted to flip over to the next slide there, Tanya. In terms of the portfolio overview, what we see here now is a growing portfolio of projects, a growing portfolio of distributed generation projects as well. Canada, Mexico, operating assets, wind, run-of-river, and rooftop solar that we sell electricity to a variety of different customers, be they utilities or commercial customers, and then development stage projects in the US as well. And then if you see this is a little bit more detail, and all of this is available on our website, obviously with the financials as well, which we'll dig into a little bit more detail with Tanya in a second here. But, this is the exciting part for us. Definitely, you see that growth in the recurring revenue from those projects. As we disclose, we look at it on a full year basis in and around 2 to 2.2 million US with good strong margins in that 70 to 80% range for these operating assets. And that continues to grow both organically and potentially through acquisition as well. So you're going to see this quarter over quarter now. You're going to see that increase in generation, hopefully, which obviously corresponds to the increase in revenue as well.
Myke, sorry, just going back to that slide there, we saw in the revenue generation, it's most apparent, Q1. Is that just regular seasonality due to wind and sun conditions or water flow, or were there any other issues there? And sort of the growth, should we expect general seasonality or generally sort of an uptick quarter over quarter?
Yeah, good question. And so what we're seeing, actually, you're seeing a couple different things in that chart for us. One is there is seasonality, definitely for renewable energy projects, especially for our run-of-river projects here in British Columbia. As you go through winter, the production lowers. And as you go into spring and summer and fall, the production increases. Definitely through spring, through freshet, which is when you're seeing all the runoff from the mountains. You're seeing an increase in revenue generated there because you're producing more electricity because the resource is stronger. For the individual wind projects, it depends on the project. A lot of them are producing more over the winter, but that's not necessarily the case across the board. So there is a bit of seasonality. What you are seeing here, though, for us as well, is that we acquired projects, previously that have now started to come online, and they are now contributing to our quarterly financials as well. So you're seeing a combination of things. But generally speaking, if we keep adding these distributed generation organic growth projects to that revenue mix, we should see it continue to grow up or move upwards. And there will be a little bit of seasonality, but obviously over the long term, we should see that just increase. And now we'll throw it over to Tanya, and if you could take us through some of the more fine details, I guess, on the Q2 results.
Yeah, excellent. Thanks, Myke. Yeah, so looking at the operating results, as you mentioned, Myke, we had a significant increase in recurring revenue to $621,000. That was like a 375% increase in comparison to the period last year. And this was driven directly by electricity revenue from the company's operational Digi portfolio of assets, as well as the Box Springs wind farm. And also we had asset management income related to the 2 hydro projects operated by Wind River. With respect to cost of sales, this includes costs related to the Box Springs wind farm and limited costs for the operation of the company's Digi portfolio projects. Operating expenses and other expenses increased slightly, and the increase was primarily due to additional G&A costs as part of the growth of the business. Where depreciation increased from $98,000 to $184,000, and this is related to the addition of further operating projects during the fiscal year 2024.
Yeah, and it's important to know there when we talk about the operating loss and the net loss for this quarter. Last fiscal year, of course, you may recall, we were profitable, and we did show a profit, and a portion of that was because of payments related to utility sales or milestone payments. And so while we have these recurring revenues, it's also important, I think, for investors to note that that doesn't make up the entire revenue piece pie for the year. So there is other potential revenue from the sale of utility scale assets as well.
All right.
Yeah. And when it comes to our balance sheet and financial resources overview, there was a decrease in our total assets on the balance sheet to $14.9 million to $14.9 million from $18.5 million in June 2024. And that was directly related to foreign exchange translation, as we are, we have revenues and assets in Mexican pesos as well as in Canadian dollars. Our cash and security deposits decreased to $893,000 from $3.6 million in June 2024. And that was primarily due to G&A and development costs incurred during the period. And we also pay deposits during the quarter. Our electricity generation assets decreased to $6.9 million from $7.7 million in June 2024. And this was also as a result of foreign exchange translation and the depreciation on the assets. And as you can see, our current liabilities increased to $9.3 million from $8.9 million due to some balances being reclassified from long-term liabilities to current liabilities during the period and as well as last year. And yeah, this is our overview for the balance sheet.
Myke, could you talk about your backlog and how many of the distributed generation projects, I guess, do you expect to come online in the coming, fiscal or calendar year, and how materially that could affect your revenues?
Yeah, so we kind of have a couple different buckets of projects. As you know, there's distributed generation, which are generally those rooftop solar projects, battery storage projects, where we're contracting with an individual customer. Then we have the larger utility projects, a few of which we should be in the place where we're ready to build by the end of this year, but they won't be up and operating and generating revenue by the end of this year, but they are relatively near term. On the utility side as well, though, we do have larger projects that we're always looking at potentially monetizing, as we've done in the past. So keep in mind that there's always that piece that's out there as well that could contribute to our revenue base. But in terms of recurring revenue from distributed generation, so far this year we've added one 0.5 megawatt project, which they generally add a couple $100,000 to the revenue line, US, give or take. It depends on the economics of the project, obviously. And we expect to see, several of those come online over the course of the remainder of the year. We announce them as they happen, and so there's not a specific guideline in terms of are we going to do 5 or will we do 10. But suffice to say that we have a pipeline of 150 megawatts of those types of projects, and we just built one for 0.5 megawatt. So we have a lot of runway in terms of the types of projects that we can get up and running, and really it's a conversation and a discussion with the business that we're selling the project to. And so some of it depends on them, but it's definitely a large part of our focus right now in terms of getting more of those up and running. So, one per quarter, I think is entirely reasonable as an expectation, as a baseline expectation, but I think we want to push even further than that. And then add to that, potential acquisitions. We sort of touch on that. We're always assessing various opportunities for both utility scale development project, but also operating assets that can add to our revenue stream immediately.
All right. I guess on the utility scale that are getting ready to build, there's you may build them, but if you get a good offer, someone makes a good bid to buy them, they could get sold off and monetized or partially monetized ahead of time, or is the ready to build sort of a big de-risking event and you're so close you're going to wait for that because you get sort of better value out of it?
Yeah, that's definitely the case. Once you hit that
Okay.
ready to build state, you've essentially not totally de-risked because there is construction risk, absolutely, but you've substantially de-risked the project. So for the main projects that we're going to be ready to build, we're projecting to be at that stage this year. There's a battery storage project in the US, a 50 megawatt wind project in the US, and what it looks like right now, the first phase of our Alberta solar project at about 16 megawatts. A total of 30 megawatts for that project over a couple of phases. Those look to be getting towards that RTB stage by the end of the year. All of those we intend to own and operate. They're up to that sort of 50 megawatt size. We have the capability, we believe, to bring in the equity and the debt required to own and operate those assets. When we talk about utility scale sales, we're talking about 100 megawatt to 300 megawatts. So for instance, in Mexico, we have a 100 megawatt wind project, a 400 megawatt wind project. That's definitely outside of what we'd be building and owning and operating ourselves. And so those are the projects that we would look to potentially sell. And we've got a couple of those projects in the US as well. So a nice pipeline of those types of projects. But the ones that will be ready to build, hopefully by the end of this year, give or take 100 megawatts, a little under that, we hope to own and operate those ourselves. That is definitely our goal. So, what we want to do is we sort of run the gamut. We develop quite a number of different types of projects. The ones that make sense for us, we own and operate up to a certain scale. The rest of them we sell at the most opportune time.
All right. On the acquisition front, I guess both on the distributed generation and the utility scale, what is the market looking like for that? Are prices up or down? I presume there's some interest rate sensitivity to there and a host of other factors. Are you having, let's say, good deal flow, looking at a lot of deals?
Yes. So it's interesting. There is great deal flow or potential deal flow because of what we're looking at and what we're targeting. So this is part and parcel with our overall business strategy of the types and sizes of projects that we're going after. Like we are not going after the gigawatts size projects to own and operate. That's a bigger player game. That is definitely a low cost of capital game for the sort of yield codes that are out there, et cetera. We are targeting those projects that have kind of fallen between the cracks in some respects for a couple of reasons. Lower capital costs, which means that we can own and operate them, but also better access to transmission and/or the distributed generation transmission system. And so for us, what that means is there's a real opportunity there's quite a few of these types of projects around in the market right now that we're assessing. So, because of what we're focused on as a company, we have a high level of confidence in being able to assess these types of projects, in the sort of, anywhere from 5 to 10 megawatt range that, maybe non-core assets for larger companies, but for us can really move the needle in a short period of time in terms of acquisition, so getting the deal done at a good price, but also bringing that revenue on quickly. So yes, we are seeing a lot of opportunities in the M&A space with respect to potential targets. And obviously, stay tuned. As we go through the process, we announce it as it comes up. If you look at our history, though, we've acquired several different either operating assets or operating asset portfolios and/or companies. So it's something we've done before, and it's something we intend to do again.
All right. Given the current political climate and tariffs and so forth, that you have operations and assets in both Mexico, US, and Canada. Do all the tariff noise, does that affect you at all? What impact is that having on you guys?
Well, it has a broader impact on the economy. Obviously, I think things are somewhat chaotic in the North American economy right now. With respect to our projects in the U.S., it's interesting. Over the course of the last 5 years ago, especially when Biden was in power, President Biden, a lot of the incentives were tied to domestic manufacturing and domestic manufacturing growth. So what you're seeing now is a lot of domestic manufacturing in the U.S., and so obviously tariffs wouldn't apply there. For us in Canada, we are not exporting a product per se into the US as a company. We're definitely exporting expertise as we develop projects there. But for Canadian projects, we're acquiring equipment from either overseas, Asia, or sometimes from within Canada, and the same in Mexico. We'd be looking at procuring equipment from Asia and overseas. And so there's always an impact potentially because of tariffs, because what will happen is you'll get supply chains sort of shifting jurisdictions, and that can impact. But in terms of pricing, we haven't really seen that. In terms of the price per watt of panels, we haven't seen a significant impact there. And also, we fit into a nice niche area where we're not looking for such a substantial amount of panels. We're looking to go and build projects that are, for some of them, half a megawatt or a megawatt, or up to maybe 10 megawatts or something like that. You can absolutely find those products. And really, the industry has been dealing with tariffs from China because of the tariffs on Chinese panels for quite some time already. So there's a lot of noise out there, I think it's fair to say. And sometimes that impacts things from a public company and public markets perspective. But from a straight up business perspective, so far, we're pretty confident also because we are diversified from a jurisdictional and geographic perspective. Operating assets in Canada, operating assets in Mexico, that drives our baseline revenue. And the projects that we're developing in the US right now, be it solar projects or wind projects on private land, touch wood, so far have not been a target of the current administration there, right? So we feel like we're in a pretty good place, but we're obviously always very diligent about paying attention to that because, the US is a massive market, right? And so we want to make sure that we're on top of it, but yeah.
Okay. All right. Any other business highlights from the quarter that we haven't covered that yet that you'd like to bring up?
Yeah, I think so. There's a couple related to a project in the US, one of the large projects we're developing there. So in the quarter, we received the interconnection agreement for the Primus Wind project. As I said, the Alberta project, which is just south of Edmonton, is now at an advanced stage of permitting. So made a lot of good progress there. And then post-quarter end as well, we had a couple of interesting announcements that I think it's worth touching on. One, the project that's now up and running, that DG project in Mexico. We had signed an agreement with Export Development Canada to really backstop some bonds for us, some surety bonds, which allowed us to free up some working capital for some cash collateral that we had on those. We had signed an agreement with Vancity Capital Corporation to refinance the Wind River acquisition loan, which is, again, one of the acquisitions that we made. And again, this is all even though I'm talking about it right now, is really thanks to Tanya, who got both of these across the line, both with EDC and Van City. And then very recently, we ended up selling a CHP, or Combined Heat and Power Project in Mexico, that we had actually acquired as part of a company acquisition a couple of years ago. We still have all the operating assets. We acquired that company, I think, for about 1.4 million US, and just sold a non-operating piece of that portfolio for 1.5 million. So this is really, what we do. Other than develop and build and operate these projects, we go out and look for opportunities in the marketplace to acquire either companies or projects that are perhaps non-core for other companies, and get them, bring them on board, and either optimize them or create a little bit more value and potentially sell them, like we did with this asset. So, it's a pretty interesting and successful business model to date. And I think we're now starting to see some of the recognition in the market for that, which is great. And I'll backstop by a pretty strong quarter from my perspective.
All right. Yeah, you're definitely, from when I first started talking with Revolve a few years ago, the size and your revenues are meaningful. Now, at the early stage, it was a lot of, hey, look what we're gonna do, and now you've done it. So and hopefully keep continuing that path. So that's
Yeah,
great. All
appreciate
right,
it.
I think we've covered everything in the quarter. Are there any other highlights or summarize or put a bow on anything before we wrap it up?
I think that's about it. I think without a doubt, 2025 for us is looking like an extremely exciting year. And not just talking about sort of financials, but all of these other pieces of the puzzle that are coming together now, a relationship with EDC, the refinancing of acquisition loans, showing the market that we basically have a tried and true business model here, that we can recycle that capital, we can build and own and operate projects, selling other larger projects, keep that capital wheel moving. So it's a pretty interesting business model, and 2025 is really just full of opportunities. So I think that's illustrated by the what we've seen in Q1 and Q2, actually, sorry, Q2, also in Q1, in terms of the revenue growth that we hope to continue. So good things ahead.
Excellent. Myke, Tanya, thank you very much for giving us an update here. That was really good. Congrats on a solid quarter, and I'm looking forward to seeing all that happens in the coming fiscal and calendar year. All right, have a great day and talk to you again soon.
Thank you, Martin.
Thank you.